Hey, welcome back. We certainly feel like singing It's a Holly Jolly Christmas today. As we told you, options expiration is kind of like Christmas for those who sell options every month. And the biggest present we have under the tree for this month, Netflix. About 100, 175, 170 December put spreads that at about 4 o'clock today should be worth $0. So thank you to whoever's on the other side of that. You turned our death wish into a Christmas wish, and we thank you. We are firm believers, along with Jim Cramer, that oftentimes you need to be full of courage in order to make good money in this market. Certainly, we illustrated that when Netflix fell about $30 to 177 and change, and we sold all those 175, 170 put spreads in December. But with time on our side and only about 5 days left, we just felt that the selling was so overdone that we took advantage of it. Another situation in which we think the selling is massively overdone happens to be Visa. Yesterday and this morning, when the stock in the red, we sold the January 65.60 put spreads in Visa. There was the about a 4 month move got undone in one day yesterday when the legislation came out, or the what the Fed is looking at doing in terms of the interchange fees on behalf of companies like Visa. Okay, Visa is the largest payment network in the known universe. MasterCard is probably the second. For us, the number two play that we like is actually eBay. In countries like developing Asia and in the Eastern Bloc of Europe, in what was used formerly the Soviet Union, they are actually using eBay for cross-border transactions. So you're actually going to see people use eBay over other forms of moving money in and out of countries like that. That is a huge boon for growing economics, and we can see PayPal in countries in Africa and certainly in Latin America. So PayPal is a way that we like to play payment processing in addition to Visa. We like both of those. Okay, over the long run, Visa is a great company to own, but you want to trim above 80 and you want to get back into or add to your position below the $70 level in Visa. Our trade, of course, is those January 65, 60 put spreads to sell those in January. Okay, you should sell those for above $1, by far above $1. If you can't get more than $1, wait for a day when Visa's in the red, and then you can sell them. Okay, so in terms of payment processing, we do like eBay. Buy eBay below $30 a share. I don't think that you need to pay up for eBay. The market should give you an opportunity to buy it below $30 a share, and Visa below $70 a share. There's I don't want to say there's a floor at 65, but if you look at a 1 year chart of Visa, it's pretty clear that the last time the stock got around $65, it bounced pretty hard and made its run all the way back up to $80 before again selling off yesterday in one day. Took 4 months to go from 65 to 80, and took 1 day to go from 80 to 67. So we like shorting the 65-60 put spread in Visa for January expiration as a great way to earn some money. Okay, HiSoft. Look, this thing bounced from 24 and change, which is where we said the technical level was for the bottom, back up to, right now it's trading up $2.13 to 28.28. Look, if you've been on with us, if you've had a monster run, if you're up to 10% or the $4, please, by all means, don't look a gift horse in the mouth. Bulls make money, bears make money, but pigs get slaughtered. So glad that you held with us. So for that person that left that nasty comment on our YouTube channel, turned out okay. All right, sometimes you have to have courage to make money in this market. Okay, we brought you two call spread risk reversals this week. We're gonna end the week for you with a third one in Google. We like the January 2012 50, 590, 640 call spread. What does that mean? We'll get out our fingers again. You are short 640 call and 550 put, and long the 590 call. Okay, so here's your call spread, 590, 640 call spread. This is a long call spread, and to help finance it, you're going to sell a 550 put. All of these are January 2012 expiration. January 2012 expiration. Just to put the trade on, you're going to get paid $2,750 per structure. This is what we like to call an instant winner, meaning as soon as you press the button, you've made your money. All you need is for the stock to stay above 550 by January 2012 expiration. If you do, you get to keep 100% of that money. Then you're left with the intrinsic value right? As long as it's above 590, your spread's going to have some value, even if it's only a couple bucks. Your max gain is the full $50 spread, which is $5,000 in profit, for a total profit of $7,250. Not a bad day for a year's gain. Okay, it's going to take up about $10,000 of margin, so this is only appropriate for larger accounts. Okay, if you don't have an account, probably well above, $150,000. It's going to take up too much of your position. It's probably going to be too big of a position size. So only put this on if you have a larger account. But for larger accounts, it only sucks up about 10 grand. You're going to get paid $27.50 just to do it, right? So consider, $27.50 for tying up 10 grand. That by itself is a 27% rate of return. Not bad over a 1 year period. We like to trade. Watch your December options positions into the close to make sure nothing crazy happens while you're not watching. Thanks again for tuning in and for another week of Lunch of the Market. We really appreciate you guys. Have a great day. Have a good weekend, and we will see you tomorrow.